So today there's been a bit of a change in the markets. We've had a bit of a bull run lately, and it's looked pretty good. A lot of people getting excited. People were thinking, hey, we're out of this one. The bull market has started, but suddenly today there's been a bit of a turn, and that's basically because of a couple of metrics that was released today, and it's basically about the consumer. So the consumer is what obviously drives the American economy, and we're always looking for leading indicators or leading catalysts, some people call them. That is something that will predict the future. Something like the GDP is actually it's not a leading indicator because we get it about 6 months late. So looking at the GDP is actually not a wise way to look at the economy. Or 3 months late actually, I think. But things like the consumer confidence or the housing price index or how many home sales there are, that's sort of a leading indicator to where the economy is going. The consumer index, personally, I think or consumer confidence, personally, I think is one of the best ones because it will tell you how people are feeling now and how they will spend their money tomorrow and the day after that and the day after that. So it is, and the consumer confidence index, that's the one that we got today. I just want to see, there's two. There's the consumer confidence index and the consumer sentiment. Okay, so the consumer confidence is the one that actually has 3,000 samples by the Conference Board. So to me, that's a little bit more accurate as to the proper consumer sentiment. Because the consumer sentiment itself is only 500 households. And I'm a firm believer that the more samples, the more accurate. And also the 3,000 households, they make sure that it's across 9 of the census regions. So it's a very widely distributed sample. And that went down today. The news we got today, it went down from, the previous was 98.4 and the current is 95.7. And this was very far below the forecast, which was 97.2. And the thing is with the consumer confidence is that it has actually been declining for the last couple of, it sort of peaked around about beginning July, end June, and it's basically just been on a downwards trend since then. And the forecast was basically that it's sort of going to flatline now, but there's obviously today we've got a confirmation that it's still on a very sharp decline, which is a bad thing. The second bad thing that we're getting today was the new home sales. This is the new home sales for the month. And the new home sales for the month is down from previous month was 642,000 to 590,000. And the forecast was 660. So exactly the same thing happened. The forecast was that we're going to run flat, but it didn't. It actually went down. So that's mainly why the markets responded the way it did today. There was a couple of earnings that came out, Google, Microsoft, and GM. I don't know, I think Google came out after market closed, so I don't think that can be a big change because obviously that was aftermarket. I'm not sure about GM and Microsoft, but I think all of them were misses. Yeah, I think all of them missed. So also not, I mean, that might not be why the market went down today, but it's also an indicator that things are not looking good going forward. It's sort of a confirmation that in the last 6-7 months, consumers haven't been, McDonald's, that's the other one, McDonald's. McDonald's was also a miss. That McDonald's is a very big consumer indicator. Not really going forward because obviously it is earnings that was in the past. So it does sort of confirm that what the consumer sentiment has been realized. Still, we obviously as investors, we're looking for signs that things are turning around, things are going up. The bull market's going to come back now. And we're getting the Fed's decision on, when is it, Wednesday? Let's check, was it? Yes, tomorrow. Yes, so tomorrow we are getting the Fed's interest rate decision, which should be about 75 basis points, which would put us on 2.5%. So we're still going to get that. That is actually good news, although I would like it to a little bit higher, and also a FOMC statement in a press conference. That'll give us some indication of what they think is going on in the markets. But so far, I'm not seeing anything good. I don't think there's a bull market starting. I think there's a lot of optimism about a bull market starting, and that is slowly but surely pushing prices up a little bit because people are just very optimistic. But if I look at the figures, if I look at the economy, I don't think there's actually anything turning around right now. So yeah, this is me, Steve. If you enjoyed this video, remember to press the button. And if you want to see more, then remember to subscribe. Until next time, ciao.